One of the questions that I get quite often is, Rog, I get that I can trade SPY calls and puts. I get that I can trade the ES futures, the micro MES futures, or even options on the ES minis, right? So there's a lot of ways we can look at it. But what about, Rog, SPX and XSP puts and calls? So I'm going to walk you through something that we did in the Sector Secrets Mastery and the Simpler Central room. We walked through this trade today, and I'm going to walk you through the details of how you can use the S&P, the mini ES, to trade SPY, SPX, heck, or even the micro MES futures, right? So kind of three things. All right. Now, if you're an avid SPX trader or SPY trader, remember, you're really still looking at a 930 to 4 world. And if you have your indicators kind of warming up with the very thin pre-market of those two symbols, you're not getting the real participation of looking at what is essentially a 23-hour traded market in the ES futures. So the first thing is, if you want to trade SPY, if you want to trade SPX, look at the S&P, the ES mini S&P futures, because these are already trading with good volume actively before the 930 bell. So whatever indicators you're using, whether they're hourly price movement ranges, or maybe you're using a VWAP or whatever it may be, right? You've already got a really good idea of where the ranges are, and ranges that are also reflecting volume, participation, right? That attention. So right here, two interesting things happened. So this dashed line here, this orange dashed line, is the previous session close, which I keep in a label on my screen. It's a line in the sand that tells us if we're above or below, well, the previous session. That is, to me, the equator, because generally we can be kind of bearish below it, or at least there's a chance that we could be bearish below it, and we're generally going to be bullish above it. And there'll be that battle that occurs right around that area, give or take plus or minus a few points. There'll be a little battle that occurs. Well, if I'm sinking down to that level, while the S&P is dropping into the hourly price movement range green zone, which is a volatility-based support zone, right? And I'm so close to that previous session close, this is really not a place where I want to look for lower lows, right? I don't want to get long puts or get short the ES. I want to look for a potential buy. Now, to find the buying opportunity, and by the way, while this sell-off was happening in the ES, the NQ and the YM were also selling off, but both of those were below the previous session close. And that's why I thought to myself, well, if I'm going to buy any one of them, why not buy the one that's closer to that line in the sand, that psychological barometer of are we in the bullish or bearish hemisphere compared to yesterday's close? Right? So that's number one. That's why I chose to go with ES over these other two, because of its proximity to that previous session close. All right, so what do you do here? Well, there's a couple things you can do here. One, you can just put in a limit order to buy the ES, and that's going to be in this area right here, either at 56.08 and a quarter or at the upper edge of the price movement range at about 56.07 and a half. Okay, that's one way you can go. And by the way, you could buy the micros at the same pricing. Or as we sink into this level, right in here, you price out calls on SPY. So you can, okay, as we sink down into that, I would look at the money SPY calls. All right. Now here comes a different, and this is where a lot of people say, okay, Rog, but what about SPX? What would you do there? Now, I'm not an avid trader of the SPX. I think there's so many great ways to trade S&P, and I'd rather trade the futures most of the time or SPY calls. But here's the thing. SPX can be pretty darn spendy. So there's a couple things you can do. First of all, a lot of traders buy out of the money strikes in the SPX in an effort to spend less on the option. So there's two levels you can look at. Either this halfway mark and buy the out of the money calls with the expectation that it could be in the money when we rally. So you could look at this halfway mark, or you could look at the upper edge of the resistance here. And again, this would be out of the money. Not my preference, but when it comes to SPX, something you can do. For a lot of traders, they like to sell premium. So as we sink into this zone, you would sell SPX puts, or just look to collect credit on those traders chasing this thing down. Hey, if they want to overpay for puts, let them, because you know what? This is likely going to be a support zone, and as we bounce, these puts will lose value. So there's your collection of credit, and then if you can buy those back at a lower price, great. Where are you going to buy them back? Same level, the halfway mark or up at the red zone. Where at that point, what you sold premium on, you buy back for less money, hence profit, right? So those are the ways you can look at the ES, and then you can choose your own adventure into what you want to do, right? Long ES, long MES, long calls on the SPY, and then a few different choices on SPX. Those of you with an account size big enough, just buy the SPX calls, right? So there's a lot of choices you have there, but it all stems from this 23-hour futures contract.
Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.